Okay, good afternoon and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we are going to be talking about how you can maximize weekly income utilizing options, but more specifically, how you can find the highest probability stocks to sell options on to maximize your weekly income. And we're going to be talking about everything from underlying security selection to option strategies to even a bit of a commentary on the current market conditions and how you could potentially adjust these strategies based on different market environments. So let's go ahead and get started. What we do here every single Thursday is these options education sessions designed to help you better help you become a better trader. We focus on a well-rounded education encompassing technical analysis, fundamental analysis, option strategies, trading mindset, everything that we feel you need in order to confidently grow your account in the long run. And as you can see, many of you have already chimed into the chat window. Many regulars have already chimed in and said hello. If you're joining us for the first time, if you're brand new, please bring up your chat window, say hello to everyone, let us know where you're from. As you can see, we have a vibrant community of traders that support each other. I'm really looking forward to having you come on board if you're brand new to options play. Now, before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities during today's session. So my goal here during today's session is fairly simple. I want to help you learn how to identify the best stocks for selling options for maximum weekly income. So we're going to be looking at both how to find optimal stock picks, meaning what type of stock should you be looking for in order to gain that directional edge, and more importantly, how you can maximize your income. So what are the different option strategies that you should be utilizing to maximize that weekly income alongside with the capital appreciation from option selling? So today's session is recorded. Both recording and slides are available to our members. You'll be able to access that by once we post that here on Sunday. You'll be able to see the recording and the slides so you can follow along at your own pace. Now, if you don't currently have a membership or if you don't have a free trial, you can sign up using the QR code on your screen, or Philip just posted a link into your chat window to sign up. It takes literally 10 seconds to sign up, no credit cards required. And what it does is it gives you access to the tools that I'll be showing you during today's session alongside with the recording and slides from today. Okay, so if you're brand new, if you're joining us for the first time, please make sure you sign up for that free 30-day trial. It's going to give you access to everything that we're going to review during today's session. So the strategy for maximizing income, there's two parts. One, you have to identify stocks that have what I consider a high bounce potential, meaning stocks that are extremely oversold with strong fundamentals that are likely going to have a big move here to the upside. And what that is going to allow you to do is allow you to capture the income from a strategy, from these strategies that we're going to be showing you as quickly as possible, typically within 1 to 2 weeks maximum, and many times in shorter amounts of time as well, to be able to capture most of the potential income that you can generate from these types of strategies. When you combine these stocks that have the high bounce potential with stocks that have high implied volatility, you're going to be able to maximize the income from the options that you sell. And generally speaking, stocks that meet this first criteria will generally have a high implied volatility that's going to allow you to maximize income potential. And the reason that we look for stocks with high bounce potential is because stocks that are oversold tend to have much higher volatility than stocks that are overbought. So when stocks are near market tops, that's usually when volatility is the lowest, which is not a particularly the most optimal time to be selling vol. So that's really why when we think about how to maximize income, we really are looking for stocks that are severely oversold that we think are going to bounce higher going forward, because those are the candidates that are not only from a directional view perspective, do you have a statistical edge an advantage to, but you also have an edge from an options premium selling perspective. You want both if you want to maximize income. So what we're going to do here is once we identified those stocks, what we're going to do is we're going to sell 3-week put options and hold it for roughly 1 to 2 weeks, trying to maximize that income in the first week of holding that 3-week option. We're not going to hold that option to expiration, but we are going to trade 3-week options. And the reason that we preferred selling a 3-week option and holding it for 1 week rather than selling a 1-week option and holding it to expiration is because when you sell a 1-week option, you're simply going to get less income per trade. You're going to have more frequent exercise risk, and you're generally going to have higher transaction costs because you're forced to roll that every single week. So this is really kind of why we prefer using a slightly longer dated option and then just simply holding on to it for the same period of time rather than doing a short period of option where you are forced to do something within 1 week. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. Perfect. Okay, so let's dive into this particular trade. So when we talk about oversold stocks that have high bounce potential, this is what we call counter trend trading. And counter trend trading is, for some investors, very uncomfortable. A lot of investors, you might have heard of the term, the trend is your friend. You like to go with the trend, and going with the trend is easy to understand. It's comfortable. You're going along for the ride. Going counter trend is, on the other hand, quite unnatural. You're basically doing the exact opposite of what everyone else is doing. But that's really where the best opportunities lie, because by definition, if you're following the trend, you're already late to the game, right? So you're effectively hoping that trend will continue. Versus when you're trading counter trend, what you're trying to do is you're trying to set the trend, or rather, you're trying to identify when that trend is going to start. That sounds harder to do. However, with the right tools, we can do it with relatively the same reliability as following the trend, with far better results from a timing perspective and far better results from a volatility perspective. So when we think about counter trend, what we're trying to do is identify trend extremes. And what we do here at OptionsPlay is we use a combination of using a shorter and longer period momentum in order to find price extremes on multiple time frames. So, we all might be familiar with classic technical indicators such as RSI or stochastics, or there are countless number of momentum indicators that all try to calculate the same thing, which is, when something is overbought or oversold. They just all have different mathematical calculations to do that. But largely, if you look at kind of the different indicators, there are largely telling you the same thing. So it doesn't really matter which one you are choosing to use. However, if let's say you just use, let's say, a standard 14-period RSI, what you're going to find is that it's not a particularly reliable indicator to tell you when something is going to reverse. It's reliable in certain market scenarios, but it's not always reliable in other market scenarios. So, you might find yourself having a ton of consecutive false signals when you're using this a single momentum indicator. And using different momentum indicators doesn't solve the problem, because you're just looking at the same data, just using different mathematical calculations. So what we choose to do is we look at momentum indicators over different time frames. So for example, using a 5-period RSI and then a 20-period RSI, and seeing that something is oversold on both time frames in order to have a much more reliable signal, because a lot of times you might be oversold on the short term, but not oversold on the long term, or vice versa. So you really want to see alignment on both, and that's when statistically you're going to have a far better opportunity for those bounces. You're going to have fewer opportunities, but the opportunities that show up are going to be far more reliable. Okay. Second thing that you can do to further help you identify these opportunities is identify trend exhaustion. Now, this is not always necessary, but I do tend to find that when you are capable of identifying it, you will also have more reliable signals. It also means that you have fewer signals, but you have more reliable signals. And this is really where you look at price divergence between the price and momentum. So here's a classic example of a stock move making lower lows, but as it made lower lows, momentum did not make a new lower low. Those are signs that sellers are starting to get exhausted. And once sellers get exhausted, meaning there are no more sellers left, that's when prices can reverse back in the other direction. And we're trying to identify trades at that exact moment that it reverses to the other side. Like I said, that sounds hard to do. That sounds daunting. That sounds counterintuitive to everything that you might know if you prefer to follow the trend. But this is really where you are going to find the best opportunities if your goal is to maximize weekly income. Now, the other optional thing that I like to do, and this is optional to those of you that are viewing this, but I tend to do this, which is aligning it with a fundamental thesis. Now, we all have different ways that we look at fundamentals, simply just because there are infinite number of ways that you can slice and dice a financial statement to try to gain some insight into the business and whether or not you believe that that business is worth investing in or not. We all have different investment objectives. We all have different things that we are looking for. So I'm not necessarily going to provide a framework per se, other than the fact that if you have been a subscriber to OptionsPlay for any period of time, you know that I use fundamental analysis, and all of my trade ideas and all of the ideas that we present to you on a daily basis have a fundamental story attached to it. We look at valuations, we look at growth rates, and we look at profitability. Those are the three things that we look at, and we look at those things in conjunction with each other. If a stock is growing faster than the industry and is more profitable than the industry, it should be trading at a valuation that's higher than the industry. This is basically common sense, and vice versa. If a stock is growing slower than the industry, less profitable than the industry, then it should trade at a valuation that's lower than the industry. And we see plenty of times where the exact opposite is true. Stocks that are growing faster, more profitable, trade at a valuation that's below the industry average, and vice versa. And those are the best opportunities from a fundamental perspective. And those are the opportunities that we bring to your attention on a daily basis. We also have watch lists built into our tool that scan for these overvalued, undervalued stocks as well. So if you don't necessarily want to do the research yourself and you want to rely on our algorithms to do that, I'll show you here in 1 second where you can find those list of overvalued and undervalued stocks using the OptionsPlay platform. But what we want to do is we want to identify these types of setups that give us the best possible statistical chance of providing a bounce opportunity, and not just a small bounce, but a significant bounce. Does that make sense, everyone? Please type 2 into the chat window. And keep in mind that when you are early to the trend, right? When you are able to identify reversal points like this, that in itself is relatively rare, right? Because stocks only go from bullish to bearish or bearish to bullish, fairly infrequently. Versus when a stock is in a bullish trend, there are multiple opportunities to enter that trend if you are, quote unquote, following that trend. So when you set a trend, or when you're early to identifying a trend, not only can you take advantage of the initial trade, you can also take advantage of all the subsequent trend following trades as well. Because what that allows you to do is to have a fundamental thesis for the underlying stock and basically follow that fundamental thesis as it plays out. And that's where you can turn a small win into a much bigger win from an options trading perspective. Okay, so now let's take a look at, once we identified those types of stocks, what you can do. And I've kind of given you a list here for reference, so that when you're watching the recording or you're downloading the slides, you can maybe print this slide out or have it as a reference point for yourself to review at a later point. But what I want to do is I want to walk you through these steps on the OptionsPlay platform. So when you log into the platform, you'll see at the very top, you have ideas on the very upper left-hand corner. Now, the platform itself is divided into three sections. You have trade ideas, watch list, and portfolio on the left-hand side. You have your security analysis panel here in the middle, which gives you summary technical analysis and gives you a better understanding of the trend and relative strength of a stock. And then you have our trading and income strategy here on the right-hand side, which will help you structure and optimize an option strategy based on the outlook that you have on the stock. So what we're going to do is we're going to spend our time first on looking at ideas first. Now, when we look at technical ideas, that's really where we're going to spend our time mostly on today, because this is really the ideas that we have based on screens from the underlying, based on the underlying security. So, for example, one of the things that we're going to look for, first of all, is we're going to look for bullish opportunities. I'll show you some bearish opportunities here in a minute in terms of how we can screen for that as well. But for now, we're going to look at bullish opportunities because that's what we just discussed. And what we're going to do is we're going to only look at counter trend ideas. We're going to look at bullish counter trend ideas. And what we do here with our bullish counter trend ideas is exactly what I just laid out to you before. We look for stocks where it is oversold on two different time frames. It's not enough that it's oversold on one time frame. It has to be oversold on both time frames at the same time in order to justify, a potential big reversal from bearish to bullish. Okay. So, and then what I typically like to do is I will filter out based on liquidity sometimes. But let's just take a look at what we have here. So, and the only reason I'm not filtering out by liquidity at this point is because there are only 4 options. And I'll talk a bit as far as why there are only 4 securities at the moment. But the reality is that there are not many stocks that are just at that tipping point where it's likely to turn from a bearish to bullish at any given moment. Right now, there are only 4 stocks in the entire universe of stocks that we screen for that fit this criteria. And I particularly like that because it means that I'm looking at far fewer opportunities. I'm looking at just the best opportunities every single day. I'm not looking through a list of 70 stocks and trying to figure out of those 70 stocks which I want to trade. I have a very small handful of stocks that I might be looking at. And I actually find that far better for my process than having to look at 70 different stocks and figure out of those 70 which ones I want to trade. So today there are only 4. There are many days where you're going to see a lot more. It depends on market conditions as well. When the market has just rallied 23% off of the lows in the month, there are not many stocks that are currently bearish that are about to turn back into a bullish phase. So we are currently in a market environment that isn't particularly favorable for this specific strategy, but there are still a few stocks that meet this particular criteria. So let's look at one, and I'm just going to bring up United Health just because it is by far out of these 4 symbols the most widely known and probably most widely tracked. And we all know kind of what's happened with the stock recently if you follow it. This was a $600 stock less than a month ago that traded all the way down to $250. So more than a 50% haircut in just 1 month. And a lot of traders look at that kind of chart and they say, no way am I going to touch a stock that's down 50% in 1 month. But if you think about the old adage of buy low, sell high, how do you buy low? You have to buy low when everyone else doesn't want to touch it. When everyone else thinks that this is a dog and it's not going to go anywhere, that this has the potential of continuing to fall lower, well, that's really where you have opportunities to potentially be that trend setter, if you will, and be a buyer early of this particular trend. It doesn't mean that it's going to reverse lower. It doesn't mean that it's going to reverse higher here, but that is certainly something that we should be looking for. In this particular case, there isn't negative divergence, meaning on a lower low, we haven't made, momentum has also made a lower low. So we don't have that as an additional confirmation. But like I said, that's not necessary, but maybe for some traders, this might be one that you pass on, right? And keep in mind, not every day is there going to be an opportunity to do this. Some days you just don't have opportunities like today. I don't think we have a wide variety of selections to come from, but United Health, I think is one worth paying attention to because it has rallied substantially here. And over the last 4 or 5 days, it clearly has stabilized here. So, it's not still in this downward trajectory where day after day it continues to make lower lows. It gap lower here, kind of traded lower, gap lower here, gap lower twice. So we gap lower 3 times here in just the last month. Clearly, there are some signs that sellers are starting to perhaps get a little bit exhausted, and this provides that opportunity potentially for a big move here to the upside. So that's what we're looking at here for United Health. And what we want to do is we want to look at how can we maximize income on a stock like this. So let's just assume that there was some negative divergence on this particular stock. What strategy would we trade is what I want to discuss here, right? Because every single day you're going to get different ideas when you use this scan. And this is a scan that I use all the time. And not every day you have great opportunities. Some days you just don't, and that's okay. You just want to, this is where you want to be patient, you want to be methodical, and you want to have a process that you go through. And if the process says there's nothing today, you walk away, move on. You maybe trade something else, or you just simply come back tomorrow to see if there are new opportunities the next day. But what we're going to focus on here on the right-hand side is going to be the income tab. And specifically, what we want to do before we look at the income tab is there is a button here at the bottom called income settings. Some of you may not be even familiar with this this feature of the OptionsPlay platform. Many of you that have been using this platform for a while may not even be fully aware of it. So I just want to make sure that I help you understand how this works. So the income settings allows you to choose kind of what are your preferred settings for cover calls and cash secured puts. So you can do it for cover calls and you can do it for puts separately. So for today, what we're going to discuss is selling puts. Now, you can take this put selling and turn it into a credit spread. If you don't want to put up the cash to buy 100 shares, that is perfectly reasonable. But the underlying strategy is still going to be selling a put option, even if you change it slightly into a credit spread. So what this allows you to do is put your settings. So what I'm going to do is shorter dated. That's going to look at about 21 days to expiration. And I'm going to choose the aggressive strike price. When you're trying to maximize income, you want to have a more aggressive approach to selecting your strike price. So aggressive means that we're selecting about a 40 delta on a short put. And basically what you do is you save this as default. And every time you click on any of these ideas or any symbol that you put in, and you click on the income tab, it's automatically going to find the cover call and cash secured put based on your personalized settings. So here at the very top, it'll ask you, do you own shares of United Health? For us, because we don't own this particular stock, we're going to select no. And what that's going to bring up is the short put. So as you can see, what this does is it automatically selects the expiration date and strike price on your behalf. This is looking at selling the June 13th 285 puts. And as you can see, what this brings in is 3.53% of the stock's value in just 22 days. Look at how much this stock earns in terms of income. It earns 2.77% per year, which is not a bad dividend, right? 2.77% is actually slightly above the S&P 500 average. So this is actually above average from an income perspective. But here, instead of earning 2.77% per year, we're going to earn 3.53% in just 22 days. That annualizes out to 77% yield on your cash that you're setting aside in order to sell this cash secured put. Now, we could argue that not everyone has $27,500 to sell a cash secured put. And that's what I was saying before. You could turn this into a credit spread, and I'll show you that in 1 second. But this is the fundamental basis for selecting stocks and strategies that's going to maximize income and maximize your profitability on that specific trade. When you identify stocks that are severely oversold, that have that high bounce potential, that have relatively high implied volatility ranks, meaning these are stocks that are the options premiums are very elevated right now. You're going to collect above average premiums. And what that means is that you have directional alignment and you have maximum income potential on this type of trade. We'll talk about kind of what adjustments you can make if you don't have the $27,000 to sell a cash secured put. That's an easy thing to do, but that's the underlying fundamental strategy for maximizing income. So if you sold this June 13th expiration, what you can do is you can basically hold this for about a week, 2 weeks time. And as the stock bounces, you're going to make a good percentage of the $972 of this put in a relatively short amount of time. If you get even a small bounce in the underlying security, you're going to see at least 50% of the gains on the short put in a short period of time. And that's how you maximize income, or how you maximize finding opportunities for this specific strategy. Does that make sense, everyone? Please type 3 into the chat window if that makes sense to you. Perfect. So a few different things, right? Like I said, and let's just look at a few other ideas, right? Let's look at FICO. And, I'm looking at FICO knowing that the vast majority of people are not going to have $170,000 worth of capital in order to sell a cash secured put here. But look at this particular stock, right? This is the type of stock that I think a lot of investors initially would just say, no way in hell am I going to touch this. This was a $2,200 stock that's now trading at $1,700 in just 2 days. This is clearly a stock that something is happening here. But think about this, right? This pulled back to an important support level here at 1,700. Could there be a short-term bounce after what has been such a big move here to the downside? That's what option premium sellers like this are looking for. You're looking for stocks that have just severely oversold in such a short period of time that there's a high bounce potential, especially if you find it near a support level here. So we happen to be near that $1,700 support level. So what this tool does is it allows you to quickly looking at the June 20th 1640 puts. Now this is 29 days to expiration because I'm guessing FICO doesn't list weekly options. Actually, let's just verify that. Yeah, so it doesn't list weekly options. It only has monthly options. So the only one that we can find is the June 1640 puts. You're going to collect $5,400, which is 3.5% of the stock's value on a stock that pays 0 dividends. So, annualizes out, your yield on your cash is 53%. If you want to maximize income, you have to find stocks like this where you're going to get the highest bounce potential and the maximum income combined with each other. And you can utilize strategies like this in order to maximize that income. Okay. So what we're going to do here now is look at, and let's look at maybe one more. Let's look at, is this, this is a treasury ETF. Let's not look at that. I think a lot of the treasury ETFs right now are probably the ones that are severely oversold, which actually, you know what, let's look at these treasury ETFs because, the treasury market has obviously been in a severe decline, right? And, we just recently printed a new 52-week low on TLT. We just printed a new 52-week low on a lot of these long duration bond ETFs. And it might be an uncomfortable position to be in, but if you think about buying low, selling high, you can only buy low when stocks are hitting new 52-week lows. And it might not be the right strategy for you, but let's take a look at this here as well. I've noticed that there's also a little bit of negative divergence here as well, right? I'm sorry, positive divergence, basically lower lows in price, where we're no longer making a lower low in terms of momentum, right? So you have some signs of sellers being exhausted here, and maybe that is the potential for a bounce opportunity. You obviously can't quite do fundamental analysis on the bond markets, right? You can maybe do other forms of analysis from a credit perspective, but this has a lot of the things that I'm looking for potential bounce. It's not a particularly liquid ETF. You could potentially, if you do like this, replace it with something that's similar, that's more liquid, like TLT. I think you'll find very similar price action here in TLT. Yeah, so almost identical. New 52, a new relative low. Do we make some positive divergence here? Slightly, yeah, slight positive divergence. Lower lows in price no longer being confirmed by lower lows in momentum. And today we're up on the day, so maybe there is some signs of stability here. And also, you look, we're just near that long-term support around 83. So you got a lot that's potentially going for a bounce here. And now let's look at selling the put option. June 13th, $83 put will generate 1% yield in 22 days. That's 19% yield on a bond ETF. That is, it doesn't sound like very much when we looked at the 85, 95% yields on equity premiums. But for a bond ETF, that is a hell of a lot of yields, considering TLT generates 4.5% yield. You're looking at nearly quadruple that using a cash secured put here. So this is really where you can use this opportunity. You can use these filters, or rather these trade scans, to find the best trading opportunities for selling these types of trades. And someone's saying, what, you don't care about relative strength? I do care about relative strength, and these are the weakest stocks in the market. That's exactly what I'm looking for. Where it says strength, that means that has some of the weakest relative strengths in the market. Well, how do you buy low? You buy low where no one wants to touch it. Where it's one of the most underperforming stocks in the market are the ones that have the highest bounce potential. If something has a high relative strength, they're not likely to be oversold. They're not likely to have high implied volatility. It's these really low strength stocks that are ones that have the best bounce potential and the highest yield from an option selling perspective. Okay, so that's how you use this tool. Every single day you come back, if you use the exact settings, you use bullish counter trend trades. If you have a lot of different options on a given day, you can filter out based on liquidity, you can filter out based on IV rank, just to kind of bring down the list to a shorter, more manageable list. And what this lets you to do is basically click on the symbol that you're looking at, go to the income tab. Once you have your income setting set, it'll automatically select the short put for you based on the short dated aggressive short put. And that is a good starting point to help you do your research from a trading perspective. Okay. So looking at the best opportunities here right now. Now, just to kind of help you better understand this, the market has obviously rallied substantially over the last month. So there are just naturally very few oversold stocks that you think are going to have a bounce potential. At the flip side, you're going to have a lot more bearish opportunities, meaning stocks that are incredibly strong. So if you look at relative strength, look at where are the strongest stocks in the market. These are potential ones for a reversal lower here. Let's look at Cloudflare. A lot of these tech stocks, currently are trading at valuations that are incredibly high, like Cloudflare, that have a potential reversal opportunity. Now, these are not going to be as good of an opportunity. They are, effectively what is a mirror image of what we just showed you here, but they're not as good because stocks, when they're trading at all-time highs, have relatively low implied volatility. So you're just not going to get as much premium from selling stocks that are bearish to bullish versus you're not going to get as much premium on stocks that are near all-time highs that you think are going to reverse lower than stocks that are near all new lows and are going to reverse higher here. So but you can look at, in this market environment, as you can see, there are far more bearish opportunities right now, right? These are all the stocks that are severely oversold that have a potential of potentially turning lower here. So if you own the stock, you can look at selling covered calls. If you don't own the stock, you can look at selling credit spreads. And even if you are trading those the bullish opportunities, you can also look at credit spreads as well, especially for the higher price stocks. So if we look at United Health, for example, if you look at United Health, if you use the high implied volatility setting here under the trading tab, we're going to be able to help you find credit spreads. And the reason that you might want to trade a credit spread is because the credit spread gives you far less risk, right? So we talked about if you use the cash secured put, you need about nearly $29,000 in margin in order to sell that cash secured put. But here you only need $1,500 worth of margin to sell a credit spread. And you can adjust these credit spreads to a shorter time frame. So we can adjust it to the same June 13th expiration. You can even adjust it to selling the same strike price that we're looking at here from the cash secured put side, which was the June 13th 285s. And the only thing you have to do, generally speaking, is you want to adjust your strike prices so that what you're buying back is roughly 25 deltas. So as you can see, the 275s are 26 delta. So for this June 13th expiration, the 275 strike is the 26 delta strike price. That's generally what you want to use for the long leg of a credit spread. So here, as you can see, I'm only risking 678 to try to make 313. So instead of needing $29,000 to sell a cash secured put on United Health, if I were to sell that credit spread, I only need $687. We're talking about, about 2% of what you would need in terms of margin to sell that credit spread versus a cash secured put. So you can make these adjustments to your portfolio. You can make these adjustments fairly quickly to your portfolio once you have the underlying strategy and the underlying put that you would sell if you need to make some variations. And what I specifically want to show you here today is how you can paper trade this, right? So if this is your first time doing this, you're not quite comfortable, as the proverbial catch the falling knife here on stocks that you normally wouldn't touch, right? But you're curious about the strategy. You're curious as to how it's going to work out. Well, this is really where you can use the paper trading feature within OptionsPlay. You can click on the trade button. And there's two ways that you can do it. We have a paper trading feature that's already built into OptionsPlay where you can basically create a fictitious portfolio. I'm going to do that with you here today. I'll create a new personal portfolio. I'm going to call it the weekly income portfolio just to make it super obvious. And what I can do is I can take any position that I have that I'm looking at. So for example, if I'm looking at selling this June 13th 285 put, I'll click on the trade button and I can select the portfolio that I just created, the weekly income portfolio, and add this position to it. You can even adjust the premium. So for example, let's say you think you sold it for $9.70, you can put in the premium that you believe that you would get filled at, click on add position, and now you can track this short put in our portfolio tool. In the portfolio tool, you can have a drop down of your positions. So let's look at the weekly income portfolio. So you can see my short one, June 13th, 285 put. It'll also calculate the P&L for you. So you can come back over the next week and see how the strategy performs and see how we do. And I'm purposely building this portfolio today so that we can come back in 2 weeks' time and do another session where we can look at these positions and show you how they've performed, good or bad. We're going to look at all of them and see how they've played out, what you could do to manage these positions as they start to approach expiration. We have 22 days out. We'll start looking at this, let's say in about a week and a half. We'll do another session. We'll invite everyone back here and we'll look at these positions together. And I just want to put on a few of these positions here at the same time. So I was looking at bullish counter trend ideas. Let's take a look at what we have here. We had United Health. We also had FICO. So let's look at, what I want to do is these bond ETFs as well. Let's do TLT just because that is a proxy for the bond ETFs and it's very liquid. So we'll do the same thing. We'll do income. We'll look at the exact standard strategy here. We'll do trade. We'll select our weekly income portfolio and we can add our position and we'll track some of these together. And at the same time, what I'll do is I'll go to that FICO position here as well. Like I said, most of us don't have $170,000 to sell a cash secured put, but maybe we might want to sell that. So what we're looking at selling the June 1640 puts. So let's take a look at that. Let's look at selling the June 1640 puts. And then we'll buy back a 25 delta, which is roughly the 1580. So here, instead of risking $170,000 or needing $170,000 to execute this trade, you only need $4,185 to execute this trade. Now, still might be out of the range for some of you, but obviously a lot better than $170,000. And that just helps you illustrate what you can do if you do find an opportunity in a stock that is just a little bit too expensive for you to sell that put option, what you can do in terms of adjusting it to something that is more palatable to your portfolio. And as you can see, what your the margin requirement on a trade like this is a fraction, a very small fraction of what would require in order to sell that that cash secured put. And then lastly, what we'll do is we'll look at a couple of bearish trades as well, right? So we'll go back to our ideas. We'll look at counter trend ideas, and we'll look at the bearish ideas, and we'll kind of filter it by relative strength. Before I was looking at Cloudflare, so let's look at Cloudflare. Now, Could you sell a naked call? Yes, but I don't recommend you to do that because naked calls carry unlimited risk. So that's why I would prefer using the cash secured put. We would look at selling, a short dated June option. We would look at selling perhaps, roughly, let's say about a 40 delta, 62 and a half, and then buy back the 25 delta, maybe the 172 and a half. So here we're collecting $3.09 and risking 690. Let's add this to our portfolio here as well. So we have a couple of bullish positions, and just given the market conditions, given where we currently stand, I think it makes sense to look at a couple of bearish positions here as well, even though you're not getting as much income on a bearish position. If you are concerned about a pullback here in the markets, tactically speaking, it makes more sense to take a bearish position than a bullish position in this type of market condition. I don't know if we have any more to look at here. Let's take a look. If there are any other ones that I think are worth looking at. A lot of these are smaller stocks. Maybe GE, everyone's familiar with GE. So let's take a look at that as well. This stock, as you can see, has had a very big run here. Are there some signs of negative divergence? Not really. We continue to make higher highs in price. Momentum has kind of continued to squeak higher here. So you don't have the classic signs of exhaustion. A lot of times when you look at these charts, you have a very classic sign of exhaustion. I'm not seeing that here. Let's see if there are any other ones that do have that classic sign of exhaustion. Here's a good one, even though this is a high price stock. So notice how we continue to make higher highs in price and momentum continues to make lower lows. That's a good sign that there's some exhaustion here and you get a good sign, a good potential of a pullback here. So let's look at this, adding this to our fictitious portfolio to track and come back here in a couple of weeks. So this also doesn't have weekly options. So we'll look at selling maybe a 740 and buy back the 25, which are 780s. So $2,600 worth of risk to try to make 1,300. Let's add this to our portfolio. And that's how you can use this tool to, number one, find the best possible opportunities from a stock trading perspective that have the best opportunities for a bounce. The ones that are severely oversold also happen to have some of the highest implied volatility in the markets, and that means that you are going to maximize your income on these types of strategies. And then hopefully, for those of you that are brand new to the strategy, I'm showing you how you can utilize the tool to make paper trades so that you can follow along, test out these types of strategies, see how they play out throughout as you get closer to expiration. And we'll look at kind of managing these positions, closing these positions in a couple of weeks, and show you how you can utilize these tools to further maximize your income. Okay? So with that, that covers what I wanted to share with you here today. Like I said, if you want access to these tools, if you want access to these slides that give you kind of a template for the instructions of what I showed you here today, you just need to have access to an account here at OptionsPlay, which you can sign up for your free trial at the link on your screen, optionsplay.com/signup, or you can point your phone to that QR code on your screen to sign up for that 30-day free trial. No credit cards required. It takes 10 seconds to sign up. It'll give you access to everything I've shown you here during today's session. Okay. So let's open this up for Q&A. I'll leave this up here while I'll start looking at Q&A. There is a chat window and there's a Q&A window. Those are separate windows. If you have any questions, please type your questions into the Q&A window, and I will try to answer as many questions as I have time for during that session. Can you explain the credit versus debit spread and the reasoning as to which one to use and when? So a little bit outside of the scope of today's session, but I'll address that, because debit and the credit spreads is the difference between buying versus selling. So I have recorded specific sessions on buying versus selling, and I do recommend that you go and watch that, because it's a little bit more nuanced than that, right? You want to buy options when you think something's going to make a big move. You want to sell options when you think something is potentially going to make a relatively smaller move, or you want to take advantage of time decay. You want to take advantage of a collapse in implied volatility, which is what we're doing here. So it's a matter of what your outlook is on the stock to determine whether you want to do a credit or a debit spread. One is not better than the other, just each one is suited for different market environments. And you have to kind of think about what market environment you think a stock will be in order to figure out what is the right strategy. If a stock is significantly oversold, wouldn't you expect to have low volatility? No, the exact opposite. Think about like when is VIX the highest? VIX is highest when S&P is lowest, right? So the lower you go, the more volatile something is, the higher the implied volatility is. Alex, I'll have one of our us customer service reps reach out to you with regards to your question. Um, a new instance of options play selected. Mitch, I'm not sure what your question is. Happy to address it if you don't mind helping me understand what your question is. What are the green arrows? We're looking at the green arrows. That's just telling you when the trade idea was generated and whether it was a bullish or bearish idea that was generated on that specific security. Richard's asking a great question. He's saying for income collectors, is whether to be aggressive, which raises the likelihood that you will be put the stock, or conservative using safer deltas. Can you describe the difference in approaches? Sure. I mean, you've already hit the nail on the head, right? It's just different deltas, different probabilities is what you're selecting, right? Um, from my perspective, when you identify stocks near these price extremes, a lot of times when it's done correctly, you can identify the reversal point down to the day and down to the penny. And because of that, you generally prefer to be more aggressive in your trading, right? The whole point is this is an aggressive strategy and you want to aggressively approach income. You certainly can be more conservative if that's just, your risk tolerance is there. But when you're a conservative, you're also collecting a lot less income. And I think that the whole point of this type of strategy is to identify where you can maximize income. So to then kind of lower the amount of income that you generate from it sort of goes against the whole point of the strategy, in my opinion. So um, if you're not comfortable with the risk, then I think the best thing to do is just turn a short put into a credit spread. This way, you reduce your risk, you reduce the margin requirement, and you don't necessarily have to take a more conservative approach to selling a put option. Can you provide an updated way to derive weekly income from something like the Qs? So here's the thing, right? If you're looking to just derive weekly income from like an index, this is not the strategy for it, right? Meaning, if you're looking to derive consistent income from an index, generally speaking, that's what like selling straddles and strangles are for. You're basically trying to, because anything where you're trying to do it consistently, meaning you're doing week after week on the same security, the only advantage that you have on those types of strategies is the fact that in the long run, implied volatility tends to overstate realized volatility. And the only way to really capture that overstatement of implied volatility is to sell strategies like a short strangle or a short straddle. Um, it's a completely different beast in terms of what we're discussing here. But if your goal is to just to sell the same strategy on the same index week in and week out, then yeah, either sell 30 delta puts or 30 delta strangles is generally where you want to be. 30 delta puts are not going to collect as much premium um, as the strangles. So the strangles are going to be slightly more efficient at this strategy than just if you were to sell one side of the strangle. How to use strength under technical ideas. So strength tells you the relative strength of a stock and depends on what your outlook is, right? If you're looking for following the trend, I generally prefer, 6, 7, 8 as like a good trend following strategy. Or basically anything that's not a one or a two, you could potentially use a trend following strategy. You basically want to avoid the extremes when you're trend following, and you want to look at the extremes when you're trading counter trend. If that maybe that's a better way to describe it, right? If you're following the trend, you want somewhere sort of in the middle, right, where it can kind of grow in one direction or another. If you want counter trend, you want to look at more of the extremes. What does the CCI trend under scan filter? I'm presuming the question is, what does the CCI trend scan mean? So the CCI trend is this very specific trend following strategy. I've actually done a webinar specifically on that one scan that we have here. It's a proprietary, sorry, it's not a proprietary scan. It's a scan that I've been using in my trading for roughly 16, 17 years. I've been trading using this type of strategy for a long time. I've traded futures with it. I've traded equities with it. I've traded options with it. I've traded currencies with it. It's a very adaptable strategy to identify, what we call like, So for example, if you look at kind of this move here, right? One of the best times to enter this move is on this pullback, basically taking that long position. Wait for the pullback, taking that long position. The CCI trend model is trying to determine these specific pullbacks in a bullish trend and helping you enter at these very specific times. So it's all about timing is what the CCI trend does. And like I said, I have a webinar just on that one strategy alone. Can you see how Reddit looks like from a reversal, please? Yeah, sure. Reddit, I know, recently took a big hit on their earnings. Let's take a look at where we currently stand. It actually hasn't taken as big of a hit as I thought it has. Would I consider this a price extreme on both short and long-term levels? I wouldn't say so. Is it near support? Sure. And that might be a good reason to consider this, but it doesn't fit all the criteria that I was referring to before, meaning it's not oversold on both short and long-term. In my opinion, this is not a big enough move. Was this a big enough move to move things to an extreme? Yes. And let's kind of zoom in a little bit. Let's take a look at kind of this move, right? Did this move end up giving us some negative divergence? It didn't, right? It actually continued to make lower lows and lower highs. So this didn't fall under all of the classic patterns of a reversal. It did end up reversing here. I'm curious as to whether or not we generated a buy signal right here. I would imagine that we came close. If not, we did generate a buy signal there. Can you go over how to use ideas and filters? Sure. The filters, I think, are pretty straightforward in the sense that you have choices of different scans, and I think trend following and counter trend are pretty self-explanatory. Cap size, the size of the company. IV rank, whether you're looking for low rank stocks or high rank stocks, depending on whether you want to be a buyer of options or a seller of options. Liquidity is pretty self-explanatory, and then you can choose specific sectors if you like. So it's just a way of filtering through the ideas. Now we also have cover call, credit spread, and short put ideas, but I cover that pretty extensively in other webinars. Today, I really want to focus more of our time on the technical ideas and how you can maximize your usage of our platform with that. United Healthcare and FICO don't appear as ideas in a credit spread report. A credit spread report doesn't look for the credit spread report looks for trend following opportunities, and this is not a trend following opportunity. So that's why we don't have credit spreads on FICO and United Health. What is the indicator you're using for? I'm guessing divergence is your question, Stephen. You can use any momentum indicator, RSI, stochastic, CCI, it doesn't matter. As long as you consistently use the same one every single day, it doesn't matter which one you use. With spreads, can you still get assigned? You absolutely can get assigned on a spread, but we don't want to trade any of these strategies to expiration. So I'm actually going to cover that in part two when we come back here in about a couple of weeks and we look at all the positions in our portfolio, right? Whenever we're doing these types of strategies, our intention is never to hold it to expiration. So we have two strategies that expire in 29 days and three strategies that expire in 22 days. It's really one of the great things about this way of tracking your positions is that you get a very clear view of, when something expires. And you never want to hold these to expiration because you don't want to be assigned on any of these specific strategies. So we're going to discuss that again in part two of this series, which will be in about 2 weeks' time. You will get an email for the session of this recording from today if you have a membership with OptionsPlay. Otherwise, you can find it on our YouTube channel. If you subscribe to us on YouTube and you click on the notification bell, you will get a notification from YouTube when we post this link. What percentage and when do you buy to close? Generally speaking, the rule of thumb, whenever you are collecting income, you generally want to close out a trade once you've collected 50% of the premium that you could potentially collect. And when these trades are done correctly, you can usually collect that 50% premium in about a week's time. At this time, would you buy or sell puts for Apple? I've been pretty vocal about the fact that Apple trades at just a ridiculous valuation given kind of the outlook of the stock. So, gun to my head, I'd definitely be a buyer of puts than rather seller of puts on Apple. Um, there's a question saying, how can I reactivate my free trial to try the tool? Send our support team an email at info@optionsplay.com and uh, we can look at what we can do with your free trial. When is the best time to sell a cover put? I hope that the whole session was purely evolved around when is the best time to sell a cash secured put. And that is when you're looking for these bullish counter trend ideas, right? So counter trend, bullish ideas, these four stocks, those are the most optimal timing from selling a cash covered put. Like I said, credits report looks for different things, so not particularly suitable. It is trying to maximize income in a different way, but not in the same way as this. And it's not the same in terms of weekly income as it is. This is really focused on kind of trying to maximize income in relatively short periods of time of basically 1 week. Are you allowed to do credit and debit spreads in registered accounts? If you're referring to Canadian registered accounts, I don't believe so. Um, on the trade panel to the right, you present three trade ideas. One of these ideas has a blue border drawn around it. So the question is really, what does this blue border around this third panel refer to? So it basically refers to kind of some of the stuff here at the bottom, right? You can basically select the strategy that you are using based on this particular trade. And basically what it's doing here is it's selecting which one gives you the best return, right? So for example, if let's say the call option gives you the best return, well, actually the call option never gives you the best return. Either the stock does or the strategy on the right. So it's just about figuring out which gives you the best return is what the blue border is telling you based on your outlook of the underlying stock. So, you can choose different outlooks, right? Where you think the stock's going to go, and the blue border will tell you where you're going to maximize your return. Um, I consistently look at sell put strategies. If I refresh the list keeps changing. So if you're looking at short puts here, those are updated every single hour. So we're always constantly finding the best opportunities every single hour and sorting it for it. So Reddit, it's on the list. It's not anymore. I would imagine it's probably because of liquidity. I think a couple of days ago there was a lot of trading in it. It was super liquid and it made it to our list. I would imagine these days, now that kind of that volume has died down a little bit, spreads have widened out. It's not as liquid. That's why it's no longer on our report. That doesn't happen very often. Usually stocks that are liquid remain liquid, but occasionally you have not non-liquid stocks that for a short period of time look like they're very liquid because there's a lot of trading in it. Obviously Reddit reported earnings a couple of days, so there was a lot of there was a lot of trading in it, and because of that, it looked a lot more liquid. Okay, with that, that is what I have time for today. I want to thank everyone for your time. I really appreciate especially our members for supporting us and allowing us to continue to do this every single week. I have a lot of exciting stuff coming down the line with regards to how we help you identify undervalued, overvalued stocks, and specifically the timing on when to enter those stocks coming soon. So look forward to that in the next couple of weeks. And we will be back here in a couple of weeks and review these specific trades. So look for part 2 of this series. We're not done yet. I want to make sure we spend some time looking at evaluating the management of these strategies as well. So a lot coming up in the next couple of weeks. Really excited. Thank you so much for your support. For those of you that are members, really looking forward to showing you some of the improvements that we're making to the platform. Thank you so much and have a great trading day.